REO stands for real estate owned, and the brief description of what an REO is when a bank takes back possession of a property after foreclosure, and then they list the property for sale, and it's them trying to get rid of their distressed inventory. But I'm going to explain the process from before it goes to foreclosure to when it becomes an REO. And so I'm using this little snippet from California Association of Realtors form that's actually called the foreclosure timeline. And it's usually given to both buyers and sellers who are in escrow on a distressed property. And what it does is it explains the timeline of the foreclosure. So I'll sort of just touch on this a little bit. So pre-foreclosure period, obviously, the timeline starts when a borrower stops making their mortgage payments. And this is so funny, it's vague. Lender may take 2, 3, 4 more months. So you really don't know. It's just kind of up to the lender when they contact you and let you know that they know that you've been missing your payments. And when that happens, that starts the clock ticking, and that's day one. The lender's supposed to contact the borrower, talk about the financial situation, and explore options to avoid foreclosure. And if 30 days after that the borrower still hasn't done anything, then a formal notice of default is filed, and that's also known as an NOD. And once the NOD is filed, and again, this is mailed and it's a very official, about 3 months from that date, there will be a notice of trustee sale, which is the actual, auction date, foreclosure date. And so within this 3 month period from when you get the notice of default, if borrowers do want to try to avoid foreclosure, this is when they'll try to figure out their options. And one of them being, one of the most common things we see in this market is a short sale. And what this is, in brief, is when a homeowner is attempting to sell their property, but at current market value, the property is worth less than what they owe the lender. So they submit the offer to the lender, asking the lender if they're willing to take less than what they're owed on the loan. And again, then everyone avoids foreclosure if the short sale goes through. If the lender denies it, or if none of these tactics work within this 3 month period, then by day 121, a notice of trustee sale is filed, and this is recorded and it's posted and mailed to the borrower, and it basically sets the date, time, place of the upcoming auction, and it's published in the newspaper for 3 consecutive weeks. And then about 31 days from the notice of trustee sale is the actual notice of trustee sale is the actual trustee sale. And so if, all of this, the efforts to avoid foreclosure are unsuccessful, you get to day 152, then you have the actual trustee sale. And again, the trustee sale is a public auction, and in Santa Barbara, it takes place on the courthouse steps. And the problem with the trustee sale is there's a minimum bid amount, and the minimum bid is usually set at the amount that the lender is owed. But it's the reason for the foreclosure in the first place is because the home isn't worth what the lender is owed. So it generally doesn't garner any bids or offers at this public auction because nobody wants to pay more than what the property is actually worth. So it usually results in no bids, and that means no sale. And if there's no sale at the trustee sale, then the property goes back to the first lien holder, which is, in many cases, it's the bank. It goes back to the bank. And so at this point, the bank takes back possession of the property. So at this point, the bank takes possession. And at this point, it is becoming an REO, real estate owned property of the bank. And the bank doesn't want these properties. The bank doesn't want to foreclose. It's costly for them. They don't want to accumulate these properties, this distressed property, because it inhibits their normal banking operations. And by having all these properties on their balance sheets, it makes them look weaker, and it's just a headache for them to have to hire people to manage these distressed properties. So what they do is they list them as REO properties on the market, and they try to unload them again on the real estate market. And so some of the things that you'll see at this point that the bank has to do now that they're the new owners is, one, they have to clear any tax liens. So if the borrower not only stop making their mortgage payments but stop paying their property taxes, the bank has to clear that up as the new owner, because when they sell the property, it has to be cleared of those tax liens. Um, and then the next thing is clearing any of the borrower's other obligations. So clearing other obligations, which can include um, the HOA dues. Again, if the borrower stops making payments, they're probably not paying their association dues. So the bank has to make those right as well before putting the property on the market. And then the next step the bank will do is evict anyone living in the property. And if the person going through the eviction process can be timely, it can take 60 to 90 days. So sometimes what the bank will offer is this cash for keys, where they're basically offering, up to, I've seen $5,000 to the tenants to hand over the keys and move out sooner than what it would take the formal eviction process. And again, this is because the bank doesn't want to sit on these properties any longer than they have to. They want to sell them. And then the last step, and not every bank does this, but you're seeing it more and more, is the banks will make the necessary repairs. A lot of times it's just, slapping some new paint and putting some new carpet in there, just to again make it look attractive for sale, because ultimately what they want out of all of this is a very quick sale. And you'll also see this in their pricing, because one of the reasons so many buyers are interested in these REOs is that they're priced so low. And again, this all goes back to the point that the bank just wants a quick sale. They want to unload these properties as quickly as they can. And so that is what an REO is.